This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. I hope you have heard the news that the world's largest financial groups on the planet, Blackstone, Goldman, Apollo, oh heck, there are a few others, BlackRock, Brookfield, KKR, no joke. They have all assembled in a big old circle, assembling $500 billion in a memorandum of understanding for NVIDIA, which is clearly a big old commitment from Wall Street that they believe in this asset class, the asset class of compute. That's literally how Jensen framed it. He's on X touting it. And of course, you got all kinds of arguments against it. But as Tim was just highlighting in his podcast that I still haven't sent out, sorry, my afternoons have been a little client focused and project focused, and I still need a whole window of time just to write, edit, think, write, edit. I don't use AI. Anyway, original thought. This is my original thought. That the timing was suspect. The timing of announcing this AI infrastructure package, because that's what it is basically, with this consortium to NVIDIA to support an AI build out, in exact conversation about this yesterday, and watch the financing, because if it starts to slow, if it starts to stop, then the AI gig is up, right? Well, we're not there yet. I mean, and as I have mentioned, we got a lot of 2000 bulls that are basically, or 1999 bulls, I should say. And I've shown that fractal for weeks and weeks, which basically AI bulls are in particular expecting a 1999 to 20 melt up. So that is still where folks are positioned. I might further add that this is all it's sus, the timing, because we've got Anthropic that just this morning announced their IPO is coming to market. So they want to do this before OpenAI. Remember, SpaceX wanted to do it before OpenAI, and now Anthropic wants to do it before OpenAI. And they're both bleeding cash flow. We know this. And we know that they really need financing deals. And this is a really big one. Now, the funny thing is NVIDIA, I think it was December or something, did a memorandum of understanding with OpenAI for 100 billion. And they never followed through with it. But we'll see if this is obviously going to happen or not as time goes on. The deal was announced. And now we have, of course, lots and lots of, this is Zero Hedge is out saying what they're saying, record 500 off balance sheet SPV, special purpose vehicle deal to fund this round tripping. Round tripping is a nicer word. And then basically you've got what I thought was also very interesting timing. This is before the Anthropic announcement of the RPO this morning, is you had yesterday in this press release, the Google CEO, Solomon, saying, our investment and distribution roles reflect our confidence, blah, blah, blah. We're excited for the new opportunity to create a market for credit-backed NVIDIA compute. Credit-backed NVIDIA compute. So immediately you have the parallels coming in around mortgage-backed securities. Now you've got Jensen-backed securities. So anyway, this is also very interesting timing because Slock of Apollo, not his boss, who's part of the consortium, AI's money is running backwards, which is what Tim is worried about. Chip makers booking huge profits while the model makers bleed. And the profits come from investors rather than customers. This is the whole kernel of the corn right there. Chip makers earn a 41% profit margin. The model makers like OpenAI and Anthropic run a negative 59% operating margin. Slock's conclusion is that 41% depends on the negative 59% staying financeable. So this is what happened basically last time. NVIDIA said, yep, we're going to give OpenAI 100 billion. They didn't. In the meantime, in the in-between time, you got a lot of parallels here with the housing crisis of all things and mortgage-backed securities. Yes, lots and lots of similar parallels. And then on top of that, yesterday as well, sent by client Brian in the night, We have Jensen not only really literally writes a letter and as a subtitle says demand is real. This is kind of funny because my question has been, is demand real? Anyway, while wearing a new VC hat, we got this vendor financing, new asset class, we got that. But this is on top of already established massive capex. And as these deals are being announced, we cannot forget they accompany ginormous tax breaks. Well, on top of that, now the SEC is exempting data center debt from key securitization rules. So we have all kinds of reasons to own energy. So this is the data center going to war. It's almost as if Trump is desperate to generate energy demand or something. Anyway, this is what we had last night. I just thought I was on my porch and wrote a few things. But the one thing that I thought was also very interesting was this little parallel, which of course was made by Jim Chanos. James Janos is very funny. He says it's not out of the realm of possibility that the next time these guys are all at a table explaining AI financing is before Congress. It's a little tongue in cheek. Anyway, this is what I'm talking about. So it's AI is all one trade. And this is the Great Financial Crisis Congressional Review of the Banksters. And basically reminding that both mortgage-backed securities and the Jensen-backed securities rely on ever-rising higher valuations to renew, not repay, all that debt. So yeah, that was a very busy few hours. It was, wasn't it? Anyway, and in the meantime, in the in-between time, nobody's hedging. So this is really, I still have sell into FOMC, buy into CPI. CPI is tomorrow, and nobody's hedging. It is just a case of the desk flows have seen clients use options to chase the market higher, but they're not protecting on the downside. So the Goldman Panic Index, which is making the rounds, I'm seeing it in lots of different flavors, is basically the Vol Panic Index. It doesn't matter. We have a market that right now, the cost to hedge against a stock market drop has fallen to its cheapest since last year, April of this year, and very, very few panic. Nope, there's no panic. They're clamoring for calls. So you know how this goes. Protection is cheap. Look for something 6 weeks out, and just VIX is still heading down to that 14.5 where I think it bounces, and we probably have a stable volatility the next 2 weeks into options expiration.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.